question. All right, Missy will answer your question right after the train wreck of the week.
So it is that time, the time for this segment of the show, which is I call the IRS train wreck of the week. It's about a client who came in with an IRS train wreck, meaning they owed more money to the IRS than they thought they could afford to pay, and they always leave with a happy ending. In this particular story, I had an attorney come in, and she was a very, very busy, trial attorney, litigator type, and she was always traveling around the country trying cases and defending, her clients. And so she just was too busy to file tax returns. And I know that sounds kind of funny. If you're not in that situation, it sounds kind of bizarre. But she was always getting a W-2 and had essentially proper withholding and maybe a little bit too much tax withheld. But she just could never get around to filing her taxes. She had gone through a divorce and a custody thing, and there was all these things that had occurred in her life. So when she came to me, she had not filed for, 8 or 10 years. And we were working on toward getting her caught up. Well, in the meantime, the IRS went ahead and issued what are known as notices of deficiency for tax years 2009 and 10. What happens is if a taxpayer doesn't file a tax return, the IRS will eventually get around to filing a tax return for them. It's called a substitute for return. We call them SFRs. And SFRs almost always reflect a much higher tax liability than is accurate, than is real, because what the IRS does is they just add up all the income. They multiply it by the tax rate, no deductions, no exemptions, and they just whack you with a big bill. And then there's really incredible interest and penalties that occur as well. In this particular case, this individual ended up, the IRS was asserting that she owed $209,516 and change. So over $200,000. And so this was quite, a shocking revelation for her that the IRS would be this aggressive, because she had gone many years with nothing happening at all, just absolutely nothing. And then to get this in the mail, certified mail, is sort of shocking. So what we did in this particular case is we filed tax court petitions. And the reason we did that is because we wanted to stop the IRS from going any farther, from actually assessing the tax. Because the IRS in this type of situation cannot just unilaterally say you owe us this money and start to collect it. There's certain due process sort of things they have to go through. So we filed tax court petitions. We filed original returns. And guess what?
Did you get money back?
She had refunds due on both of those tax years. So we ended up zeroing out the $209,000. She didn't owe that at all. Now, the bad part of this story, or the unfortunate part for her, is that she was not entitled to the substantial refunds for both of those tax years because
it was over the time period. What's that number of years again?
It was over 3 years late, and so she was not entitled to those refunds. And I think the refunds were like over $20,000.
Oh, my gosh. That would make me throw up.
But she was really happy that she was finally all caught up. She doesn't owe $209,000. And, would it have been nice to get those refunds? Sure. But she understands in the big picture, it was her, negligence that she didn't file her tax returns. And so now,
got to give her a bookkeeper phone number.
But here's the great thing. She's all caught up. We're going to do her taxes, forever now. And, she's back in the system. So, congratulations to her.